Hi everyone, today let's take a quick look at US productivity growth, then we'll get into all of the usual calendars and metrics, as well as the charts. Then we'll finish up with my accounts for the week and my thoughts going into next week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at US productivity, we did see a tick up here. They're saying we're at about 5% growth right now, which is pretty good. Recently, we had been dipping lower towards that negative 5%. The economy had been contracting, and now we're seeing a little bit of growth, which is interesting. So let's see what they say. They say productivity is measured by the output of given individuals with a set of tools, and they say due to morale boosting and end of year partying, we are seeing an increase in productivity on a per worker basis, which is good, but they do mention that this could point to something like inflation coming. We already talked about how the Red Sea issues and supply chain issues could lead to more inflation. Now they're saying higher productivity could lead to higher wages, higher prices, and potentially more inflation, but also we are seeing economic growth, which could lead to stock market prices going higher as well, which I believe is part of why we're seeing markets go higher over the last 3 months. Otherwise, let's get into the normal metrics. We talked about fear and greed in the Friday video, but we're still at that 72. Let's look at the timeline. You can see we did dip down a little bit, but kind of looks like a double bottom here. We're still lower than the peak that we saw going back to 10 January and much lower than the numbers we saw in December. And that's even with stock market prices going higher. You can see it here on momentum. Massive upswing, closed at an all-time high for the S&Ps. Despite the fact that we're seeing strength and breadth continue to contract, we did see a slight bounce in breadth, and we'll take a look at that later on the charts as well. But put-call ratio, greed, volatility, definitely neutral, right in the middle of the same trading range it's been in, right on the SMA, and then safe haven demand and junk bond demand still sitting in extreme greed. Pretty interesting. People are just not demanding the same kind of returns when it comes to junk bond and safe havens the same way that they were at the lows. Moving over to AAII survey, you can see we're down at 40, which is a pretty significant step down over the past couple of weeks. The most recent one-year high was 20 December, and now here on 17 January, we were reading around that 40% number. The neutral mark has expanded quite a bit above the historical average here of 31.5, and then the bears have ticked up a little bit here recently as well. I wonder how this will read on next Thursday's survey, especially with the spike that we saw over the Thursday-Friday session. But right now we did see a slight dip, which is interesting. Moving over to seasonality, we've been talking about it for a while. We've just finished up with trading days 12 and 13. Now we're expected kind of a flatline dip here. We got this pretty big rally from 9 into that 13 range, expecting a little bit of a pullback potentially next week after the options expiration. We'll see how that plays out. Not expected to be very deep. And then look at this NASDAQ high is actually higher than the previous one. So we'll see if that continues. And then the bigger story here is Russell outperformance into that end of the month time frame before we start to see weakness in the end of January. We'll see how that plays out, but we'll keep monitoring. And then looking at the calendar, you can see that options expiration, we were expected to get one bearish day in there, but it didn't really materialize that way. And then looking at the January barometer, expected to be quite bullish. And it's also worth noting that this does end the best 3 months of the year, typically that November into January time period. But even with that, Tuesday expected to be more bullish historically, and then not really good metrics throughout the rest of the month. Moving over to earnings. Earnings do start quite strong this week. We have already seen the banks, and then there's some no names in that time period, and now we get into the bigger names. So you have United Airlines, J&J, Procter & Gamble, Netflix, Verizon, Texas Instruments here on Tuesday, General Electric, fairly interesting, 3M, Lockheed Martin, always interesting to see. And then looking at Wednesday, you have Tesla, After Hours, IBM, always interesting, AT&T, Abbott Labs, General Dynamics, fun to watch. And then looking at Thursday, some heavy hitters with Visa, Intel, T-Mobile, Comcast, Union Pacific, always interesting to see that, especially with the shipping issues that we're seeing right now. And then we finish up Friday with Caterpillar, American Express, and Colgate-Palmolive. Then looking at the economic calendar, pretty light actually this week. 2-year auction on Tuesday, fairly interesting. You do have S&P Global Services PMI as well as Global US Manufacturing PMI at 9:45 on Wednesday. Those are interesting. 5-year note auction there as well. And then on Thursday, you do have the ECB interest rate decision. That's always interesting. Could give it a little bit of a precursor for the US as we move closer to our Fed decision on the 30th, currently sitting at 4.5 for their interest rate. And then you have core durable goods at 8:30, US GDP numbers on Thursday, as well as initial jobless claims continue to be interesting. New home sales, 7-year note auction, and then Fed balance sheet. So Thursday, the big one for the week in terms of data. And then on Friday, you do have core and headline PCE data. That will always be interesting, especially as we get closer to that Fed decision. Moving over to max pain, obviously there's not going to be nearly as many options, only 660,000. Put call ratio is very high though at 3.1, which tends to mean you want to lean bullish in my opinion. Max pain down at 474, not going to hold a ton of weight to that. 480 is your highest call strike. We are already at the top of the puts, sitting around this 482 number, which is interesting. It's definitely going to be something to watch. Usually that means you've kind of topped out for the week, but who knows? We did get a very strong finish, almost parabolic, which is a little bit concerning, but we'll see how that plays out going into next week. But based on what I'm seeing here, this says that we've kind of topped out, but again, price action is king. Moving over to the charts, starting off with the SPX here on the weekly chart. Another big breakout, another close on the high on the weekly charts. You can see we're still aiming for that trend line, currently sitting up at 48.90, which does give you about 1.5% higher from current levels. That would be your major trend resistance from this channel. Marks the high here in November as well as January. Overthrew it a little bit in July, but ultimately broke down from that level. And now we're getting very close to that trend line. Once again, this trend here at 47.50 continues to hold. We tested it this week and then rallied higher. Momentum ticked bullish, RSI ticked bullish, and we are not quite overbought yet with an RSI read of 68.76. So everything continues to look pretty bullish here on the weekly chart. Moving over to the weekly chart on the Tasty charts, I did want to highlight here the ATR band. So I do use this metric. Has the same EMAs on it, but it has this ATR projection, which is your average traded range for the weekly chart. And you can see that third top ATR band sitting at 482.65 on the SPY, and we finished just below it for 82.43. And it is worth noting that typically marks a turning point. You can see here going back to July, we touched it on the week of 17 July, overthrew it one more week here on 24 July, and then on the following week, 31 July, then we pulled back for 3 solid weeks back into the middle of the trading range. So something to watch for, and I'll definitely look at this on the Qs chart as well. We are in the very extremes of that weekly chart in terms of average traded range. Moving over to the daily chart, you can see that very strong candle on the last day of the week. Did put a new level there at 182.75. That was the wick high. Momentum ticking towards bullish. RSI and volume continues to look very strong. And to me, on the shorter time frames, everything continues to look bullish. The only hesitancy that I have is that ATR band that I mentioned. Moving over to the NASDAQ on the weekly chart, again, another strong finish right at the highs, massive close. You can see the long-term resistance here sitting at 17,580 or so, really 60 to 80. Momentum bullish, RSI bullish. Everything continues to look bullish, but it is worth noting, I want to highlight this section here. On the RSI, we do have this kind of downtrend on RSI. We have another higher price in terms of price action, just like I showed you, but RSI continues to downtrend. So we're getting double negative divergence, where we have these kind of lower peaks. I would argue this is one peak, and then you have higher prices with a lower RSI, and then we have again higher prices with lower RSI, so double negative divergence. We'll see if that kind of materializes over the next week or not, but realistically you have about 1.5% until we hit that major trend resistance. And then moving over to the NASDAQ chart, similarly here we are at that third ATR band. You can see that is sitting at 420.35. We did get above it here, and it's worth noting that the NASDAQ can be a little bit more aggressive. So you can see here in that May to July run that we had on the NASDAQ, we hit that level, and then we had a lot of weeks of basically grinding along that same ATR band before we had a pullback. So the SPY in terms of that metric is a little bit more reliable. Once you hit it, you tend to pull back. But on the NASDAQ, It has been aggressive. We're also being driven higher pretty quickly by semiconductors and AI stocks. You can see it took a long time for this to kind of pull back after hitting that ATR band. So a little bit less reliable, but we are right there and it's worth noting. Moving over to the Russell on the weekly chart, you can see we did technically get a down week, so 0.41 to the downside. But look at that 200. I want to zoom in here a little bit. You hit that 200 and we hit this short-term support, and then we bounced really strongly back up to 192.43, which is also above my 191.89 level. So that's a pretty good rejection. Definitely a much higher low than this previous low. The question is, do we hold this, or are we just going to continue to follow through like we're seeing on that momentum chart? So based on this momentum, we did get another step down. You would expect this to continue down, similarly to what we saw here, where you get a couple of steps down and then it follows through all the way to negative territory until you see that bottoming out. You get a push higher and then you get the follow through to here. So the question is this going to be a bigger follow through? It doesn't always happen, and it doesn't have to be super strong either. You can get moves like this where you get a little bit of a taper, kind of hit that zero number before you hit bearish conditions, and then you rally up and actually end up making a new high. So that's something worth mentioning. That was obviously a much higher low than this previous low as well. So those are kind of the two scenarios that I'm watching. If it holds here at that support, 187.89, and then potentially holding that 191 level. As long as that holds, then we could be looking for higher highs. But right now, critical point, and you need to see if you get a confirmation up from this candle. And then moving over to the daily chart here just for a moment, you can see we're kind of in that downtrend. Realistically, I should probably put a trend line right there so you can see this trend line kind of marks these tops, marks the same level here. And now we're at it one more time. If it breaks above that, you could look for a clean breakout. Momentum on the daily chart says that that's happening. Volume stepping up as well. So if you get a clean break here, that could be interesting. You do have overhead resistance on the daily chart. 21 EMA sitting at 196.65, and then VWAP sitting in that same vicinity, 196.11. So that would be your first resistance after you get a breakout. You might see a rally up, pull back, test support, and then rally out. Again, certainly possible, but this does look a little bit better here on the shorter time frames than it does on the weekly chart. Moving over to the Dow on the weekly, still at all-time highs. Had another new high close, added a level here at 379.35. That is the wick high. You could argue this is still kind of a consolidation at these highs. You can see we're way above these previous highs from December of 21. Momentum continues to tick down a little bit. RSI still overbought, but you have to respect it. Shorter time frames, everything continues to look bullish. And this might be one of those rallies where price action continues to go higher, basically until you hit bearish conditions. That tends to be what happens on those stronger rallies. And I think this qualifies as a very strong rally. Let's go ahead and move to the daily chart. You can see this long consolidation. We've been holding in this range for a while. Tried to dip low, quickly rejected back to the middle of the range, gapped higher and rallied. New high close, added that trend line. If it breaks here, certainly could be interesting. But again, everything looks bullish. Momentum ticking bullish, volume ticking bullish going into next week. Moving over to the RSP, the equal weighted S&Ps, you can see this continues to not look nearly as strong as the SPY or the NASDAQ. Continues to dip lower. Tech absolutely driving growth. You can see we did just barely get back above that level here at 155.79 after wicking all the way down to 153.19. So that's interesting, but momentum continues to roll over. RSI still holding pretty strong, well above that 50 line, which is interesting. Continue to wick this candle body here going back to 31 July, holding that level. That is at the same level as my short-term support here at 154.63. So it's holding up okay. Like I said, similar to the Russell. Let's look at it on the shorter time frames here. You do still have this kind of downtrend that I was watching, and we did gap through this medium-term trend line. Haven't quite gotten back up to that. You need to see it really get back above VWAP and the 21 EMA here. You can see those are both sitting in this 156.26 area. So if it pushes through this zone, then you look for a push back up to 158.60, and then 160.30 is back above that level. So it doesn't look great right now, just kind of looks like a short-term pullback, looking for a lower high, looking for more of a breakdown. But if it gets through this zone, then it looks more interesting and more affirmative to the rallies that we're seeing across the major markets. Moving over to the SPX divided by the Russell and the NASDAQ SPY, looking at the ratios, still seeing SPY outperformance. We've had 4 weeks in a row here of SPY outperformance. Momentum continues to look good. We've gotten consistent steps down. You would expect to see at least some follow through here into bullish territory, so that would give you a couple of more weeks of potential. At least looking for that 259 level, and then 266 is your next one. This is not all-time highs for this ratio. You have to go all the way back to the dot-com bubble for that. And on that peak, we got all the way up to 3.36. We're not anywhere near that on this ratio. And you can see even here in 1990, we did get all the way up to 2.59. So we've been much higher than this in recent history. So not a major concern there. Looks okay. You could have argued maybe left shoulder head, right shoulder. And that's still technically possible with a pretty slanted neckline, but so far it does look very bullish and you have to respect that. And then moving over to the NASDAQ SPY, let's go full screen on this. You can see this is all-time highs. So you have the dot-com levels here at 3.3, and then we got above that here recently, February of 21, again here in November of 21, and now we are breaking out from that level. So NASDAQ outperformance, price discovery on this ratio, no levels above it. NASDAQ continues to look very strong, and that is the best of the group right now. Moving over to copper divided by gold, I just wanted to highlight that copper did outperform pretty strongly this week, 2.34% on the week, engulfed the previous candle. You can see higher low setup from the previous. So if this continues bullish here, momentum bullish, RSI bullish, it's still a medium-term downtrend. You can see these trend lines I've been watching, but here, higher low. That's the first higher low that we've seen here in a while. So had a little rally up, lower low, rally dipped low, lower low, and now we held, put in the trend line. We'll see if it holds. Want to see it get above this line here and hold. Maybe let's go ahead and add this trend line here on the top of that. If we see a rally back up to that 92.27 area, maybe trend resistance, look for a rally up to 1970 or the trend line at 1938. That would be bullish, and that should confirm the rally. Moving over to SPY divided by the M2 money supply, you can see we are way above sustainable, way above that 2205 number. Markets continue to rocket higher. Momentum is bullish. RSI is bullish. There are levels above this, but we have never maintained above a 22.05 level for any length of time. Every time we get into this zone, we do eventually break down, and the only time that we've done it for any length of time was the dot-com bubble. Obviously, that was not great. Eventually, we gave all of that back, dipping all the way back down into this 14 area after getting all the way up to 32. So it's worth noting you can absolutely run a lot higher. So we're at 23.19 right now, right at this consolidation. There was a massive takeoff all the way to that 32 area before collapsing back down to 14. And that run did end up being a large move, and it took a lot of years to follow through to its peaks. So keep that in mind. That does not mean we're going to reverse anytime soon. This could absolutely go much higher over many years, but eventually I do believe that it would come back into this more normalized range where we have been trading for many, many years. You can see once we hit that low from the dot-com bubble here in March of 2003, we traded in this same zone for many, many months, had a slight dip low for the 2008 crisis, and then rallied right back to these highs here in June of 2007. Touched those same levels here in December of 2019, overthrew them a little bit, and then we're in that same trading range between 20.05 and about 16. So that seems like a more normal range, and this does seem like bubble territory, but like I said, bubbles can absolutely go much, much higher. Moving over to Apple and Tesla. Apple had a big week, 3%. We dipped into bearish momentum for 1 week, had a bullish week on that same week, and then we rallied back up. So holding a higher low, didn't even get down to the trend line that I was watching. That was closer to that 178.58 level, and that's a very strong push. You would expect continuation on that rally. If we get another continuation, probably looking for all-time highs. Next level for that high is 196.79. Current resistance is 193.96. Not anywhere near that. Would give you some more upside from current levels. Does make sense for it to go there. And then looking at Tesla, we are back into this kind of descending, expanding wedge that we've been seeing. You could argue that this is going to be either a double bottom or a slightly higher low. We put this trend line in after we kind of established a small bottom here, but momentum is bearish, RSI is bearish. What we talked about in the Friday video is that if Tesla can find some strength along with the rest of big tech, then we should see the SPY and the NASDAQ take off even faster. Tesla is one of those laggards right now. Doesn't mean that it's going to happen forever. Could absolutely take off, push back into this 300 area, but right now it does not look strong. Moving over to AMD and NVIDIA, I'll continue to talk about these as these continue to drive markets higher. Look at these massive weeks here, almost 19% on AMD for the week, massive move. and then NVIDIA almost 9%. These have been the big drivers, and look at that volume on NVIDIA. 489 million shares traded, big volume, big breakout above all of my key levels. Similarly, NVIDIA making new highs, closing on the high. Everything looks like these are super bullish, and these are driving markets higher. Moving over to staples and discretionaries, looks like staples is starting to sell off. Momentum rolling over for the first week here on momentum. RSI dipped low, still above the 50 line, but breaking that trend line, closing below it here, this most recent trend. Does seem like we're going to see a little bit of negative, at least down to the 9 EMA 71.42 for that. Couldn't hold above 72.50 on the close from the previous week, so this looks weaker now. 21 EMA sitting all the way down at 70.12, so couple of dollars of downside potential there at least. And then discretionary catching a bid looks okay. Momentum continues to trend down, but RSI ticked higher, continues to hold that highly traded zone here at 172 or so. Almost touched my support 170.68, didn't quite get there, and then it rallied up, closing just a few cents above my 174.76 level. If you can hold that level, then you can look for a rally up to 178.50 or so, and then 180.10 is my next level. If those break, you got short-term resistance at 188.80. So some potential for upside here. It looks like we're seeing a bit of a rotation out of safer stocks and into growth, at least a little bit. This rotation's been a couple of weeks, and honestly, discretionary held up pretty well during that period. Moving over to tech and semis, we talked about this before, but these are breaking out to all-time highs, closing on their highs, and it looks like they're going to head higher. Typically, when you close on the high, it's a very strong candle, momentum, very bullish, RSI, overbought conditions. Absolutely could go higher, and you would expect it to based on that close. Closed on the high here the previous week, gapped up and rallied. So everything looks good here. These continue to drive markets. Moving over to transports and oil and gas. Transports did continue to tick down on momentum on the weekly chart, but look at that candle. Did close above some resistance, 258.05, finished at 258.82. Still below the highly traded zone, could end up with a lower high and then kind of break down from there. And then major support for me would be down in the 243 area, but it looks okay still. RSI, volume, up candle. If it follows through, could be worth watching, and that should confirm rally if it's going to do it. But the concern here is that the Dow is making new highs. We have clear divergence between the Dow and transports. Transports are not making new highs the way that the Dow and really the rest of the markets are, except for the Russell. And then moving over to oil and gas, this continues to be a downtrend. It's at an important level, overthrew my 128 level, held that. We're at this trend here as well. Seems to be holding momentum bearish, RSI bearish, so you do have to factor that in. We're also very close to that 144 EMA down at 123.73, so I'd watch this very closely. If it breaks down that next zone, 124, maybe a few cents overthrow to that longer term EMA is where you would be looking for some support. But interesting here, no consolidation, no holding yet, but something worth watching. Moving over to breadth on the 20 and 50-day averages. 20-day threw a big wick all the way down to 27. Rejected back up almost unchanged on the week. Momentum still bearish. This is pretty interesting. You could absolutely have a consolidation in this area. You can see we threw wicks into the same zone here in April of 23, and that got followed up by 1, 2, 3, 4, 5 wicks into that same area. So 5 weeks in a row in this same zone before we rallied out of it. Could absolutely consolidate here for a few weeks and then rally out of it. Worth paying attention to. And then looking at that same time frame here on the 50-day average, you can see we were fairly flat. Did dip a little bit lower here in May before rallying out. Eventually did get back into overbought conditions. So we were much lower during that consolidation on the 50-day average, which is interesting. And honestly, to me, 50-day average, it did hold this trend support, but this step down on momentum, pretty consistent. And I would expect that to follow through. RSI also broke below the SMA, also not a great sign. You don't see a lot of reversals on breadth. We've talked about this before. Typically, when you get this high on momentum, it rolls over all the way to bearish. Similarly here, rolled all the way to 0, consolidated, and then followed through. So that was a little bit of hesitancy. And then here from bearish to bullish, rallied up, chopped, and then finished out. And then similarly, rolled back into bearish, back into bullish. So these swings tend to be pretty predictable, and they do tend to follow through a little bit more than you see in regular equities. Moving over to yields, you can see 2-year yield did rally. So we're at this 4.4 area. We finished right in that same zone. Continues to hold at that level. Momentum bullish, RSI bullish. So this could absolutely go higher. But this trend here on the 10-year looks much, much stronger. Significantly higher lows versus this lower low that we saw here. So 2-year made a lower low, 10-year made a higher low, held the 21, rallied up to the 55. Momentum bullish, RSI bullish. Did get a step down, which is interesting after touching that 55 EMA, which is currently sitting at 4.18. But I continue to think the 10-year is going to rally here. Seems to make sense. 2-year I would expect to hold in this zone. Moving over to the put call ratio, we did hit that 1.4 level. We talked about it on the day that it happened, and then it rejected back into the middle. That could have been a short-term bottom. Seemed to be at least in the price action. Now we're looking for an overthrow down to that half range. You have a lot of room to go there. Could happen in a short period of time. You can see some of these candles are pretty long. Goes from the midpoint all the way down to that 0.5 level. So could absolutely happen, but it hasn't yet. So we'll look for that. That would give us some indication of topping. We're not seeing it yet. Moving over to the dollar. We talked about dollar weakness on the Friday session. Broke down on the day. Momentum rolling over. Makes sense. Let's look at it on the weekly time frame. This weekly continues to look strong. So we're seeing a little bit of divergence between the two time frames. Weekly chart, momentum rolling towards bullish. Might see just a down week. Ends up holding, and then we get continuation. Makes sense. That's usually what happens when you see shorter time frames looking slightly bearish, but longer ones continue to hold that bullish frame. We obviously had a massive rally here from July all the way to the peaks in October. Look at all of those green candles in a row. Very, very consistent up to that high of 106.84. And at this point, I would honestly expect to get back into that zone. You can see a low, higher low, held the 144 week moving average. We're right at the SMA. We did close just barely below it on RSI, so we might see a little bit of a rejection, like I said, shorter time frame, but I would expect that to be short-lived and then this weekly chart to continue to rally back into those previous highs eventually. Might take a few weeks to get there, but that's what I'm looking at. Moving over to bonds, you can see JNK held up a little bit. We talked about it. Let's look at it on the longer time frame. Doesn't look nearly as good. Rolled over here on 2Jan, had one up week, lower high, one down week, not great. So weekly charts don't look good. Still an inside candle. That does tend to lead to more bearishness in my opinion, especially with this rally into the zone. Looks like consolidation, potentially for a break, especially with momentum fading here. And then we've already seen it on TLT. This continues to downtrend. Let's look at it on the longer time frame. In terms of areas of support, we've broken all of them. You have VWAP sitting at 92.58. That could be an area of support. It's about $1.50 lower from here. And then you got the 21 sitting at 91.84. Again, just a few cents lower. Momentum continues to roll over. This looks weak in my opinion, and that's part of why I think the 10-year is going to continue to go higher. If this zone doesn't hold, which I don't expect it to, then this could be moving back down to a double bottom, down in this 83 range. Something to pay attention to. Be very careful if you're trying to be long, especially over a shorter time frame for TLT. Moving over to volatility, talked about this in the Friday session. These continued to dip low on the daily charts. Let's go ahead and look at the longer time frame. Move index right at that 144 continues to hold there. Might look for a bounce, could be interesting. And then looking at the VIX similarly through a wick high, we talked about these continuing to hold higher lows. Momentum on the weekly chart continues to look interesting. And this is kind of what the VIX does. You can see it here, consolidate through a wick, and then pulled back to an area of support and then went much higher before breaking back down into that same level, held that zone couple of weeks and then broke out again. So we're starting to see the early formation of that, starting to see this move, in my opinion, overthrow these previous highs up to that 55 EMA up at 1647, which does fit with the overall thesis of slightly bearish as we start to top out in markets. But remember, on the shorter time frames, this is still a little bit bearish and it could move back down to 1240, kind of bottom out there, and then we see that wick out. So that would look something like that, which kind of gives you that rising expanding wedge up into that 1630, 1640 area. Moving over to my accounts, I ended up making about $1,600 on the week, which is fine. IWM still holding the same position 13 days from now, expecting to collect this $7 credit. Max profit has continued to sit at 194. If this does start to look a little bit more bullish, I might roll it out in time, give myself some upside potential. But right now, still holding right in that sweet spot. And then looking at the Qs, still holding. My max profit here is at 425 and 426 for these two positions. Got a lot of time on those, 55 days. That's a long time for these covered calls, but you can see $22 and $20 on these positions, and my strikes are all the way up at 402 and 405. So plenty of time and plenty of room in terms of protection. If we do start to see that reversal, I have lots of protection to the downside. But if we do continue higher, I'll probably just sit on these and end up letting them expire, collect my profits here. I do have about $2,000 worth of profits potential left. So 4 contracts times about $500 a piece in terms of potential profit. So about $2,000 left on that 2-month period, and we'll see how that one plays out. And then looking at TQQs, I've been trying to play this in my IRA to give myself some NASDAQ exposure. It seems to be working out well so far, making some money on these shares. I sold a covered call, which is already at max profit for $53 for $1.28, and that's already down $100. My max profit for that position would be $54.28, and you can see we're about 25 cents above that. So if we start to see a little bit of a dip, this call should help protect me. I did sell a 52 put. Not sure how I feel about that. Might be watching that one closely to take it off if we do start to see that dip that I talked about. But right now, everything does look bullish, and I am positioned bullish, and I can roll this 53 out another week if I need to, and up 1 strike to try to take advantage of a little bit more profit there. And then if energy happens to rally a little bit, I have this 92 put that I was using for protection on a call spread, which I did make money on. Now there's no bids on this. I was trying to get rid of it. Can't do it here. We'll see how it plays out next week. Maybe energy rallies. It did rally a little bit into the end of the week. And maybe I'll look for a position there. I didn't talk about energy, but oil and gas looks okay, so might be worth watching. Otherwise, playing TQQs in that account. Let me know down in the comment section what you think of productivity in labor in the United States. Is that giving the economy and markets a boost, or will it affect inflation? Otherwise, let me know what you think of the charts, or if there's any charts you would like me to cover, definitely let me know. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.